Research that shows 9 in 10 Australian SMEs are open to partnering with a non-bank lender, and more than 50% plan to use a non-bank lender to fund new business investment in the next 6 months. To get across that detail, Jon Sutton joining us from ScotPac. Jon, good to catch up with you.
Great to be here. Thank you, Andrew.
Why the attraction then to the non-bank lenders for SMEs?
Well, I think there's been a real shift over the last couple of decades. In fact, in the last decade, when we did this survey, only about 7% would actually consider using a non-bank lender. 2018, it moved to about 44%, and now we're seeing 90% in our recent survey results. And I think it all comes down to choice, flexibility that non-bank lenders can provide. Also, probably a tightening up of the credit from some of the banks, and a lot of the SMEs are actually looking for fast, flexible solutions, and that's what non-bank lenders provide.
In contrast to the major lenders, then, what you're saying, because those credit conditions have tightened, it's become too onerous and just too difficult to actually secure that credit at the moment?
I think there's a couple of things here, Andrew. Is really a lot of SMEs actually see the opportunities and they want to seize those opportunities really, really quickly. And one of the benefits of a non-bank lender, and particularly the one where I work and lead, ScotPac, is you can actually give answers within 24, 48 hours so that SMEs can take advantage. So if you're an importer and all of a sudden there's some stock made available, they don't want to wait 6 to 8 weeks to get an answer from a bank, when you can go to a non-bank lender and actually get that answer really, really promptly, and then lock away that those critical imports that they may need for their manufacturing business.
Well, yeah, to that point, I guess, what are they after? What are they seeking this credit for?
We see it across a range of things. So, we see it might be for CapEx, it might be for the purchase of new products, it might be the purchase of raw materials. So, for example, 10% of SMEs are actually going to invest further in their business. So they might need a new truck, they might need a trailer, they may need some raw materials from imports from China, and that's what we're seeing. So, the SMEs that want to invest are investing in their business. They're doing it in capital goods. They may want working capital as well to allow them to actually import or to reduce their sales cycles as well.
So what trends are you seeing in terms of capital expenditure then? I guess particularly bearing in mind that macro backdrop that we have at the moment, where interest rates, of course, do remain historically high. Are they trying to look over the horizon to the prospect of perhaps rates being cut?
Absolutely, and I think there's elements of the economy that are running really, really hot. So if you're actually in Queensland or West Australia, where they're very resource intensive industries, they are actually continuing to invest in their businesses, particularly in plant and equipment. Other areas of industry, such as maybe in food service or hospitality, are probably doing it a little tougher than what some of these other industries are doing. We're also seeing a considerable investment across green and greening technology as well. So
you mentioned the ease, the speed, the flexibility that these non-bank lenders offer. What are the advantages of that then for an SME?
Well, I think it's surety. So if you're running your business, one thing we do know about SMEs is that they're incredibly time poor. They tend to do a lot of their work and their planning in the evening. They see an opportunity. They want to seize the day. So if you're a concreter that's won some new contracts, you want a new concrete pump, they want to be able to do it. They want to be able to fulfil that contract. They don't want to wait 4 weeks, 3 weeks to be able to get an approval to actually go ahead and purchase that vital piece of capital equipment. So for us, it's for serving those SME needs. It's all about the speed to market, allowing them to get on what they do best, is to grow their business.
Jon, what are you seeing in the SME space at the moment? What sort of feedback are you getting? Because you look at some of those statistics at the moment with insolvencies, particularly the smaller end of the market, they are at historic highs.
Yeah, they are. So, we're truly on track to have 11,000 insolvencies over a 12-month period. That's the highest it's been since the GFC. There are particular industry pockets that are really doing it tough out there. Hospitality in particular. Manufacturing, particularly in food manufacturing, is doing it pretty tough at the moment. Certain sections of the building game, particularly around residential, is doing it really hard. Why are they doing it hard? Is they can't get ahead of inflation. That's why it's important to get inflation down. So things like insurance are through the roof, wages, electricity bills, power bills, they're all through the roof. And that's contributing to rising cost pressures that SMEs are facing, and it's really difficult for them to actually eke out price increases.
Do you find then that many are seeking to perhaps extend their line of credit or access new credit simply to make the ends meet, to keep the business afloat?
There's a couple of things that are happening out there at the moment. One of it is that the tax office has become probably one of the larger SME lenders by default through providing tax relief and tax payment plans. There's some $38.5 billion is owed to the tax office. A lot of that is on tax plans. And also, we're seeing sort of increased inquiry from a range of clients and customers who are looking to actually get better working capital products into their business so that they can actually manage the cycles that they're going through.
And once again, does this come back to the fact that you're getting that flexibility with the non-bank lenders, where the big banks are much more rigid and perhaps playing hardball with a lot of these SMEs?
I think banks have their own lending mechanisms and their own lending policies. With non-bank lenders, they tend to be more flexible, they tend to look at things, and they tend to look at the cash flow lend. Whereas with banks, they tend to want to have bricks and mortar as security. At ScotPac, we actually look through the cash flow cycles, and we look at the strength of those cash flows and what they're going to use those new assets for. So
given the trends you're seeing there with that lending at the moment, would you expect the non-bank lenders will have an even greater proportion of that share of the SME market?
Well, I think that's the way, and what drives that as well is the broker community, the advisory community, the debt advisors, and the accountants are actually looking at alternatives for their customers, and you will continue to see more growth by the non-bank lenders.
Do you expect the big banks are going to come back and think, hang on, we've missed a trick here, we've lost this business, so they're going to be a little more aggressive perhaps?
Well, I did work at a big bank for a long period of time, and all of the big banks are sharpening their focus on SME lending, and that can be only good. So if the broader economy, the broader participants are all focusing on SME lending, it's great. It's great for SMEs because they will get choice in what they want to do. But there's no doubt that the big banks are really focusing on SME lending as opposed to what's been happening in the mortgage market, which has become highly commoditised.
How competitive are those lending rates at the moment then, I guess, ahead of the prospect of rate cuts coming at some time, maybe rather later than sooner?
Well, I think what you see is all banks are pretty competitive. All the non-bank lenders, we're all out there fighting for our space as well. And I think it's a good time for SMEs to sit down and review what their financial needs are and who provides their financial services. I think they can cut a pretty good deal at the moment.